This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Win streak. Stocks finish the week near their all-time highs. And the Nasdaq does something it has not done in 6 years.
Don't look now. Oil prices are near $50 a barrel. But is this rally different from others we've seen?
Watchdog or lapdog? Some patient deaths are being classified as less serious events. And that's raising questions about how the FDA is interpreting those incidents. The second part in our investigative series tonight on Nightly Business Report for Friday, August 19th.
Good evening, everyone. Happy Friday and welcome. Well, the Nasdaq notches its 8th straight winning week in a row. Okay, so it was just barely, and I do mean barely. Nevertheless, it marks the longest string of weekly gains for Nasdaq since 2010. That streak hit 8 despite a slight decline today. Stocks came under pressure as investor expectations for an interest rate hike later this year rose. Despite those daily declines, stocks remain near their all-time highs. Today, the Dow Jones Industrial Average off 45 to finish at 18,552. Nasdaq fell 1, and the S&P 500 declined 3. For the week, fractional moves with the Nasdaq. Remember I said barely? Well, it was barely higher for the week. The Dow and the S&P slightly lower.
Despite today's winning streak on Wall Street, many were focused on income-paying stocks. According to the Wall Street Journal, big companies are giving more of their profits to shareholders than any other time since the financial crisis, even as record-low bond yields put a premium on dividends. But are these payouts putting companies at risk? Let's turn now to Marianne Montaigne, Senior Investment Analyst with Gradient Investments, to talk more about that. Welcome. It's nice to have you here, Marianne.
Thank you for having me, Sue.
I guess that is the question. Does the dividend payout pose a risk for companies in this market?
Well, I can see that a lot of companies are increasing their dividends, and they're getting pretty high in that payout ratio. Sometimes they're borrowing even to pay the dividend, but it's generally because they don't have other good uses for their cash. And interest rates are extremely low. So on a dollar-for-dollar basis, it's better to give it to the shareholder. So
they're not jeopardizing their balance sheets. Are there any particular sectors of the market where it is worrisome to you?
It could be in some of the cyclicals, but that's not an area we really focus on. Mm-hmm. And just to look at it from our standpoint, we're concentrated on the cash that's generated from operations after their normal capital spending. And in our G50 portfolio, dividend-paying stocks, we have a wealth of companies that are still in that 25 to 45% payout ratio, the way we calculate it. One of them is Kohl's. Even with all the difficulties that they had last year, their payout ratio was only 45%.
You know, Marianne, you said that one of the reasons that they are either borrowing or using their profits to pay dividends is that they don't need the cash for other things. Is that unusual in a market? Is it specific to the environment that we're in now, or is that traditionally true?
Well, I don't think it's traditionally true. I just think that a lot of companies have not gone out to make a lot of mergers and acquisitions over the course of the last year, so they've been building their cash positions. And again, for them to just invest it at a 1.5% type of interest rate, for 10-year treasuries, it makes more sense to pay it out to shareholders.
You've used the phrase payout ratio a couple of times, Marianne. Would you mind explaining what that is precisely? And you said, well, one was just 45%, so that was fine. What's too high?
What's too high? Okay, so the way most people calculate it, it's the dividends divided by the earnings on a per-share basis. We don't think that's the best way to look at it. We think it's better to look at the cash generated from operations and then deduct whatever they spent on reinvestment in the business. And what's left is free cash flow. So we look at the dividend payments as a portion of the free cash flow. And what's too high? I would say, 90, 95% is too high, especially when you're like us looking for companies that not only pay a nice dividend, pay a nice yield, but also have the ability to grow dividends every year at a rate in excess of inflation.
All right, Marianne, we'll leave it there. Thank you so much once again for joining us. Marianne Montaigne with Gradient Investments.
Comments from the head of the San Francisco Fed weighed on stocks today. John Williams is calling for an interest rate hike sooner rather than later and is the latest central bank official to put a September rate increase back on the table. Now, Williams says that waiting too long could be costly for the economy. While he is not a voting member of the policy setting committee this year, he does have a long-standing relationship with Fed Chair Janet Yellen, who speaks at the annual Central Bank Symposium in Jackson Hole next week.
The rally in oil prices pushed crude to its best weekly gain in about 4 months. In just a few weeks, domestic crude has risen more than 20%. And though we've seen crude rally before, this move higher isn't the same as the others. Jackie DeAngelis has our story.
The bulls are back in the market, moving oil prices from $39 to almost $50 in just 2 weeks' time. The primary reason? Speculation that OPEC talks in a few weeks might finally lead to a production freeze. But many are asking, why is this time different? We saw a similar move higher ahead of the Doha meeting and the last OPEC meeting in Vienna, yet talks did not produce an agreement. Some say this time around it's the Saudi Arabia factor and its willingness to agree that could make $50 oil more permanent. And Saudi Arabia wants to see higher prices as it gets ready to issue shares in Aramco, its state oil company. Higher prices would also support an upcoming $15 billion debt issuance. The kingdom needs to raise funds to maintain its reserves because cheap oil has depleted the coffers. Additionally, in the past, the sticking point has been the market share war the Saudis have been fighting with Iran. But just this week, the Iranian oil minister said the country's production is already at more than 3 million barrels a day, almost at pre-sanction levels. That, in and of itself, makes Iran less of a threat. Meantime, freezing, when OPEC is pumping at record levels, won't have a material impact on production. A freeze, after all, is not a cut. At this point, analysts feel the Saudis could have every reason to give the market what it wants and, in turn, support oil prices for their own benefit.
I definitely think that $50 oil is possible and very probable. With Saudis, they don't even have to do anything to really just have the perception that they're going to get everything under control. And with that, the market will work its way higher.
Still, there are skeptics out there that think this is a classic case of buy the rumor, sell the fact. And the fact would be no agreement, as we've seen so many times before. For Nightly Business Report, I'm Jackie DeAngelis.
Still ahead, if you're concerned about the market at these lofty levels, our Market Monitor guest has some stock recommendations for you.
The very public and very bitter battle over Sumner Redstone's media empire is reportedly over, and the settlement keeps the Redstones in control. We've been reporting that a deal was near between Redstone, who controls Viacom and CBS, and his longtime former confidant at Viacom. And tonight, Julia Borston brings us all the details.
Sumner Redstone's National Amusements and Viacom CEO Philippe Dauman have reportedly agreed to settle lawsuits that have been hanging over the company. Sumner and his daughter Sherry Redstone coming out on top, putting to bed 3 lawsuits without testing Redstone's mental competency, which has been called into question. Sources tell us Dauman will step down as CEO immediately, and COO Tom Dooley will become interim CEO through the end of September.
This is a liberation day for shareholders that Philippe is gone. It's a better day that there are bright and competent directors coming in to join this board. So obviously Sherry Redstone's played a bigger role over these last few months, and hopefully that continues.
The question now is who will become Viacom's permanent CEO, as Dooley has been Dauman's right hand for the past decade, and sources say that Viacom's board could look outside the company for a new leader.
There's renewed speculation that CBS CEO Les Moonves would be a good fit, and CBS and Viacom could be recombined after splitting a decade ago. And meanwhile, Dauman is not exactly losing, expected to walk away with a $72 million severance package, on top of the $491 million Dauman has brought home over the past 10 years running Viacom, according to Equilar.
You kind of also have to wonder, these are some big numbers coming out of this, the cost to the company. Was this just a big shakedown, to get payments for these people who are leaving after a disastrous performance of the last few years?
Former Viacom CEO Tom Freston saying today's news of Domon's ouster is long overdue and will now make it much easier to draw top employees to the company. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Our market monitor tonight likes dividend-paying stocks of the sort we were just discussing. He's got names of companies that he says always put shareholders first. Last time he was on, about 2 years ago, he recommended Intel up 1%, Verizon up 5%, and Royal Dutch Shell, which with oil prices down, is 37% lower. He's Ed Perks, portfolio manager for Franklin Templeton's $79 billion Franklin Income Fund. Why don't we begin, Ed, with that stock, Royal Dutch Shell, which is down so much, but is still on your buy list now. Why are you doubling down on it?
Yeah, I think we've actually been given a nice opportunity to add to our position at lower prices. And certainly a lot of that was driven by the decline in oil prices from that date you mentioned, September 2014. Now, what we like about Shell is that they really have a lot of opportunities internally to reduce costs, to reduce capital investment, ultimately to focus on improving the balance sheet and improving returns from their existing projects. So we think really over a longer term period with a more normalized oil price environment that the returns are quite attractive there.
Let's go to your other picks. Microsoft is at the top of the list.
Yeah, I think it's interesting that dividends are an opportunity across a broad segment of the market today. And it's not just about utilities and telecom and the more traditional yield-oriented sectors. And, with Microsoft recently, I think investors have had a nice opportunity to buy it below its highs. Now, this is a market environment where we've been very close to all-time highs. Yet when you look at individual stocks like Microsoft, you've had moments of opportunity to do that. It's a company that has a fabulous balance sheet and I think has an opportunity, particularly in the commercial cloud area, to really drive growth and free cash flow.
A stock that yields 2.5% compared with about 1.5% for the 10-year. You could argue that Microsoft has got a better balance sheet than the U.S. government. Your third pick is Pfizer. Not that I'm making that case. Yeah, your third pick is Pfizer, also a plump dividend yield of about 3.5%, 3.4%.
Yeah, there I think once again it's a company-specific catalyst that the management team is very focused on trying to drive shareholder value over time. They're doing that by thinking about strategic options with their business, but also ultimately it's a business that we think over the next several years can generate just a substantial amount of free cash flow with, once again, a very strong balance sheet and an opportunity to kind of deploy that free cash in a balanced manner. It will be through dividends for shareholders. It will be through modest share buybacks and ultimately even some M&A opportunities.
Ed, thank you very much for your time tonight. Ed Perks is with Franklin Income Fund.
Deere has its best day in almost 8 years, and that's where we begin tonight's market focus. The world's largest agricultural equipment maker said cost cuts helped it post better than expected earnings. As a result, Deere raised its full-year profit guidance. But the global farm recession and headwinds in the construction equipment weighed on sales. Shares soared 13% to 87.32. Shares of Geo Group and Corrections Corp of America bounced back today. Executives of both for-profit prison operators told analysts that the policy shift by the Justice Department would not materially affect profits this year or future dividends. As we reported last night, the U.S. government pledged to discontinue its use of private prisons. Geo Group shares soared 21% to $23.68. Corrections Corp rose 8.5%.
Higher sales of celebrity-endorsed shoes, fueled by my son, helped Foot Locker top revenue and earnings estimate. The athletic shoe retailer said demand was strong for Under Armour's Stephen Curry basketball sneaker. I think that's the one he doesn't own, and Nike's Kevin Durant kicks. Shares now in positive territory for the year, up 11% today to 68.47. Lower foot traffic, speaking of feet, at department stores and weak demand for skincare products caused Estee Lauder to report a smaller than expected rise in quarterly sales. The company also gave weak profit guidance for the year. Shares finished the day down 3.5% at 91.73. And Madison Square Garden saw its quarterly loss widen and revenue slid more than expected. Sales fell more than anticipated as the Rangers hockey team, which got knocked out of the playoffs early this year, played fewer games in their home stadium. Shares down 2% to 184.19.
A joint investigation by CNBC and NBC New York found more than 4,000 patient deaths have been classified as less serious events in FDA's safety report. It turns out health companies are allowed to label some fatalities as injuries. But now critics are questioning, is the FDA more lapdog than watchdog? Chris Glorioso joins us with part 2 of our investigation, Death by Another Name.
I think the FDA needs to be investigated by the FBI.
Catrice Jones feels the Food and Drug Administration let her down. When this Bronx-born mom was finished having children, she chose a birth control device called Assure.
I get choked up just talking about it. This is the armband.
But Catrice still got pregnant twice, and twice she miscarried.
It's a shocking experience to find out that you were pregnant when you were planning on not being pregnant anymore. And then to lose the baby, it was devastating.
What bothers Catrice most is the way the FDA counts fetal and embryonic deaths reported by Bayer, the maker of Assure. According to the agency's reporting rules, fetal deaths and miscarriages are not considered deaths.
I don't think they counted all the fetal deaths, all the miscarriages.
She's not the only one complaining about the FDA's reporting rules.
I'll never forget this. As long as I live, he called me. He said, "Nana, my mama has died."
Yesterday, we told you about family of Shelley Wilhite, an epilepsy patient who died after complaining this nerve stimulator implanted below the neck caused painful shocks. Since Wilhite's death, her loved ones have learned Cyberonics, the maker of the device, has reported dozens of patient deaths, but classified them as less serious injuries and malfunctions.
I would like to say to the company to start being honest.
Both Cyberonics and Bayer say their products have helped tens of thousands of epilepsy and birth control patients. They insist they have reported safety issues in compliance with FDA rules. But the way the rules are interpreted and enforced may be the problem, according to Pennsylvania Congressman Michael Fitzpatrick. He says the FDA seems to be allowing medical device companies to decide for themselves when a death is related to one of their products.
Are physicians misreporting or companies misclassifying? I think the FDA is in the best position to answer those questions, and they should. And I don't think they have to date.
An FDA spokeswoman told us patient deaths could be correctly classified as lesser events if safety reports lack sufficient information to establish the device likely caused or contributed to the death. She also said the FDA considers patients to be our first and primary customer, but some patients don't see it that way.
I blame the FDA because I feel like they are supposed to be the people's watchdog.
Shelley Wilhite's family says the FDA has gotten too cozy with the device makers. That nerve stimulator was also approved to treat clinical depression, but an investigation by the Senate Finance Committee found the FDA's then head of devices, Dr. Daniel Schultz, overruled more than 20 FDA scientists, medical and safety officers, many of whom felt the device did not demonstrate a reasonable assurance of safety and effectiveness.
4 years after overriding his own expert staff, Dr. Daniel Schultz resigned from the FDA. He's now joined a K Street consulting firm that lobbies the FDA to get medical devices approved.
Schultz declined comment. His consulting firm, Greenleaf Health, did take issue with the notion that it lobbies the FDA, saying it does not lobby as defined by the Lobby Disclosure Act of 1995. That act refers to lobbying certain executive and elected leaders. The Greenleaf website says it prepares device companies for meetings and calls with the FDA and prepares applications for FDA product approval. Since 2009, Greenleaf has hired at least 7 FDA officials. We asked Scott Gottlieb, a former deputy commissioner at the FDA, if close ties to the industry are compromising the agency's mission.
You were the number 2 guy at the FDA. In your estimation, is the FDA more watchdog or more lapdog?
Look, I think the FDA is pretty rigorous.
Gottlieb said the FDA benefits by collaborating with private industry, and he said ethics and a commitment to protecting patients are guiding principles.
I think that they do, by and large, a very good job. I think that they're probably the best regulatory agency around the world.
For Nightly Business Report, I'm Chris Glorioso.
The FDA is currently spending millions to upgrade its system for recording and analyzing problems with medical devices. We should point out Bayer, the maker of Essure, says the birth control device does not have an abnormally high rate of miscarriages. Cyberonics, whose parent company LivaNova is publicly traded, says its nerve stimulator does not have an abnormally high number of patient deaths. Coming up, they're classic, they're rare, and they're very, very, very expensive. And they're up for auction at Pebble Beach. The main event, two fighters will make their long-awaited return to the octagon this weekend. Not only is there big money on the line, but there's also a big push to unionize mixed martial arts fighters. Jane Wells is in Las Vegas getting ready to rumble.
The fight's not till Saturday, but no one told the fighters. Conor McGregor and Nate Diaz will face off in the octagon in a UFC rematch, which could be the biggest fight of the year, and there's not even a title on the line. It's also a test of the league's new owners, talent agency WME-IMG, which bought the UFC for a whopping $4 billion this summer, a record for a sports franchise, which McGregor takes credit for.
You know, you've got to understand that I had a big role in that price tag, so my contract is very, very sweet.
Conor McGregor's demeanor this week was at times far quieter than last March.
Take a coffee break, Nate. And by coffee break, I mean bring me my coffee.
Back then he was brash until Nate Diaz beat the odds and McGregor. That stunning defeat by one of the UFC's biggest names touched off a tempestuous summer where Conor McGregor quit the UFC. Then he came back. Then he was pulled from a rematch in July, and now the bottle throwing incident. But the UFC's new owners may have another thing to worry about. A veteran sports agent wants to unionize the fighters.
You're talking about one employer, the UFC, that has 600 or so employees, and they tell them when to fight, who to fight, what to wear when they fight. So absolutely, there should be a union relationship here with the employer.
We would like to have like insurance, 401k, all that stuff. You know.
But I have no dental. I'd like dental.
They may end up with a very big name in their corner.
If it is presented correctly to me, maybe I will help spearhead something like that. But right now, I'm focused on the McGregor business, and that is UFC 202 this Saturday.
Saturday's rematch is being called Bad Blood. The new owners who paid billions for the UFC also hope it's a good bet. For Nightly Business Report, Jane Wells, Las Vegas.
New reports tonight on Lyft. According to the New York Times, the ride-hailing company has tried to sell itself. The companies it approached as potential buyers include General Motors, Apple, Google, Amazon, Uber, and China's Didi. So far, no deal in the increasingly cutthroat ride-hailing business.
This is the time of year when car enthusiasts can see some of the world's most classic and most expensive vehicles. They're on display and up for auction at Pebble Beach in Monterey, California. And Robert Frank is there.
It is the Woodstock for millionaire motorheads. Thousands of the world's wealthiest collectors rolled into Monterey and Pebble Beach this week for the Concours d'Elegance. There are award shows, races, parties, and the most expensive car auctions in the world. More than 1,200 cars are expected to cross the auction block, over 120 expected to sell for over $1 million. But this year's grand total of $370 million is below last year's and offers the latest sign that the classic car market, like art and other collectibles, may be slowing after 5 years of rapid growth.
Certainly in a lot of segments, yeah, I would agree with that, and I think that's healthy. I mean, you can't continue to go up and up and up and up, because if it did that dramatically, there's going to be pushback. I think there's a stabilization, which is good, but I do think that still there are going to be some record prices.
The most expensive car likely to sell this week is this 1939 Alfa Romeo 8C being auctioned by RM Sotheby's. It could sell for between $20 and $25 million. Yet it could be topped by this 1955 Jaguar D-Type Roadster that won the 24-hour at Le Mans. It's likely to be the most expensive British car ever sold for between $20 and $25 million. Now, one of the highest profile cars of the weekend is Paul Newman's Porsche. Newman drove the car to second place at the Le Mans in 1979, marking the biggest win of his racing career. It could sell for more than $5 million, even though it's not street legal. Actor and car collector Adam Carolla, who owns 8 of Newman's race cars, said the price may actually be worth it.
Everyone looks at you and they go, $5 million for a car? And it's like, all right, let's not call it a car. Let's just say $5 million for a bowling ball. What if that bowling ball is going to be worth $11 million in 8 years? Would you do it? Like, well, that's your answer.
Steve Jobs also loved this car. It was the first car that Apple Computer sponsored in 1980, and Jobs helped design the paint job and the logo for the car. So while it's known as the Paul Newman Porsche, others are calling it the first true Apple car. For Nightly Business Report, I'm Robert Frank in Monterey, California.
And finally tonight, it has been 12 years to the day since Google went public. And a lot has changed at the company since then. Its name, for example, now Alphabet. It's also expanded into different product lines like self-driving cars and renewable energy. But the biggest change of all is its stock price, which is up about 1,700% since it started trading at $85 on this day in 2004.
Wow. What a run, right?
Wow.
All right, speaking of a run, this is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
And thanks from me as well. I'm Tyler Matheson. Have a great weekend, everybody, and we'll see you back here on Monday.